Wipro for long has been an underperformer amongst the large cap IT pack with a sluggish revenue performance that's despite the numerous restructuring exercises to reverse the fortunes of the company. Now, the entry of the new expat CEO at this time when the world is facing unprecedented challenges assumes a lot of significance. Let's do a 3-point analysis to really understand if investors should bet on the new CEO's vision for a probable turnaround from here. 1. Margin surprises in Q1. Well, Q1 FY21 was decent, seen in the context of the challenging environment and also the past track record. IT services revenue at $1921 million declined by 7.5% sequentially in constant currency. Now, the decline was attributed partly to the volumes as also to the drop in the realizations. All segments degrew sequentially as well as year on year. However, the company sounded positive about the better performance going forward from, say, communications, consumer, healthcare, as well as technology segments. Now, the June quarter consolidated profit grew by 2.8% sequentially to 2390 crore rupees, supported by the other income. Now, the standout positive from the quarter was the 140 basis points of sequential improvement in the operating margin of the IT services to 19%. In fact, the company saw close to 310 basis points of sequential improvement in the gross margins as well in this quarter. Now, Wipro's ability to control costs as well as collections justifies that the improvement in EBIT margin or cash conversion despite the sharp drop in revenue is quite positive. Now, while the full impact of COVID-19 is yet to play out, Wipro's outlook on managing the margin stability and healthy cash conversions are impressive at the moment. Now, on a YOY basis, the order book is looking better. The management's own admission says that the pipeline looks to be robust. Now, the company witnessed a decline in the attrition rate as well in Q1. Wipro feels that Q1 was the worst quarter and there is much better visibility for Q2 and growth should pick up from here on, although it refrained from giving an overt guidance. 2. Can the new boss change the fortunes of the company? Well, Wipro's newly appointed Chief Executive Officer Thierry Delaporte, who is an ex-Capgemini COO, has made it quite clear that the growth is the first priority for the company without compromising on margins going forward. Now, the company is expected to make bold bets in this financial year. The company has announced the acquisition of Brazil-based IVIA Servios de Informatica Limited for about $22.4 million. Now, with cash of $4 billion, Wipro is expected to take more such strategic bets even going forward. The strategic goal of the new CEO comes at a time when enterprises globally are looking at technology as a tool to keep them going in a virtual manner. Now, cloud, infrastructure services, digital operation and platform services as well as cybersecurity are the areas which are likely to attract a lot of investment going forward. Now, while the intention is welcome, the investors would be keenly waiting for a successful delivery of this as well. 3. Wipro shares skyrocket post Q1 and what should investors really do at this point in time? Well, the shares have actually shot up 17% intraday post Q1 earnings. The top brokerage houses believe that Wipro is a good re-rating candidate and most of them were actually seen revising their target prices on the stock upward as they bet on the company's good cost control and a stable outlook. CLSA feels a potential buyback could actually limit the downside for the stock. Credit Suisse believes margin resilience, attractive valuations, as well as likely buyback should really help going forward. Also, risk-taking investors could actually take bets looking at the potential upside of a turnaround under the new CEO, possibility of an impending buyback, and also relatively attractive valuations when you compare it to the peers.